US equities had their best quarter since the COVID 2020 rebound. We'll explain and summarize what happened in Q2 of 2026 and look ahead to Q3. Hello, everyone, and welcome back to Building Wealth on the Go. I'm your host, Brad Wilson, portfolio manager with Q Wealth Partners and wealth advisor at KLT Wealth Management. We're back with our July podcast here, diving into what happened in Q2 of 2026 in the markets and a look ahead a little bit to what we're watching and what could be driving markets as we hit the summer months and into Q3 here. So we'll start out first with equity markets, specifically focusing in on the US, which had, as I mentioned earlier at the start of the podcast, its best quarter since 2020 and the rebound that we saw after the COVID crash. That really was perfect timing for the rebound, as we saw markets bottom after the fears and concerns around the war in Iran first broke out. So the markets bottomed around March 30th, leading right into the quarter starting in April, and we saw a really strong rebound. So in the quarter, you saw the S&P 500 up just over 14% overall. And really two main drivers there, or one main driver and one main lagger in the S&P 500. And that was technology. Technology really was the driver of this rebound. They were the stocks and the area of the market that was hit the hardest during that crash. And we saw energy pull back as oil prices kind of came back down from their highs with the concerns over the oil supply with the Strait of Hormuz closed. So we saw energy prices and oil prices come back down. That affected the energy sector, and technology really was the driving force there. In Canada, we saw the TSX Composite up just around 7%. You can see financials and big banks really the driver in Q2 for Canada. Materials, gold prices, silver prices all dropping, and those mining companies as well. Energy was another lagging sector, and then communication services as well in Canada. But you can see really the big driver in Canada was the financial sector. We look into emerging markets was what actually the big sort of leading success of Q2. They participated significantly in the AI trade, in the semiconductors, the chip stocks. That sector, an area of the emerging market sector really drove there. You can see information technology up almost 74% in Q2. So really strong driving factor there. Diversification outside of the US showing to be a big player this year in 2026 so far. They had some laggards, included energy as well, which was very much a theme across the board. We'll dive now into the bond market a little bit, and overall bond market was a little bit mixed for Q2. In Canada, we did see a little bit more strength overall in the bond market, and that just being more stability than anything. Bank of Canada holding rates once again. We saw a little bit of a dip in the 10-year yield curve, which helps bond prices a little bit there. So you can see the XBB, which is the Canadian Universe Bond Index, returned about 2.3% for the month or the quarter, second quarter of 2026. You can see the BND, which is in US dollars, the total world bond index there. That was about up 0.65%. So not much movement there in the global bond, total bond market there. One of the other important aspects to look at when we're dissecting investments, talking about Canada-US relations and how that impacts everything, is we saw a lot of strength in the US dollar. You can see kind of earlier in the year, it was higher. We did see a drop through sort of the war in Iran when that began and whatnot, and then we have seen it really start to appreciate, especially since it's bottomed a little bit there in May, and we've seen it now at almost the same highs we saw during COVID, during the tariffs, just before tariffs launched last year in 2025. So it's really at close to an all-time high there that we've seen at this since it's been really tracked recently in recent years. We're seeing it at a very high exchange ratio. So a strong US dollar is not good for gold. We've seen that impact the Canadian market as well. It doesn't help our Canadian to US sort of exchange as well. So something to factor in. The one positive of a strong US dollar is for Canadian investors invested in the US. that actually provides an amplified return, is that when you convert that back to Canadian dollars, you have more money in your pockets, given that there was some price appreciation there from the US dollar. So overall, a really, really strong second quarter. And as we look ahead and we're into now the third quarter of 2026, what are we watching? Well, we continue to see no true resolution to the war in Iran. We saw a ceasefire, which provided a lot of optimism towards the end of Q2. Now into Q3, that's been broken. You've seen further attacks. And so there's a lot of uncertainty there into those geopolitical tensions. So you'd like to see those kind of hopefully smooth it out over this quarter, and that's one thing to watch. The summer months are also definitely an interesting month. Some people, there has been the theory of previously of selling in the springtime and going away for the summertime. We'll see if that rings true throughout the summer months, if there is much volatility. But there is a lot on the docket, like I mentioned, with the war in Iran. This quarter will lead us right into the prime campaigning season for midterm elections in the US. That'll be another big thing to watch as we look forward. Inflation data in the US, especially with their rates still being a lot higher, there is pressure to have rate cuts. Rate cuts should stimulate the market in theory, but if inflation's running rampant, we maybe even push more towards a rate hike than a rate cut. So it'll be interesting to see. Likelihood is they continue to hold off until things settle, especially with the conflict in the Middle East. So that's all for this July episode of Building Wealth on the Go. I hope some of this information was informative to you. You took a little bit of something as we look ahead into Q3, and we'll be back next month with another deep dive into the Canadian economy. And we will be back with our Q3 market update in October. Thanks as always for watching, and we will see everyone again soon. Bye for now.